Hello, everyone, and welcome to the first Market Bites of the year. 2026 is here. Hope everyone is doing well, whether you're listening via the podcast or on YouTube. I hope you had a good festive period and are ready to attack the year. The first 8 days have already been incredibly interesting. There's been geopolitical headlines, there's been continuation of some moves. Last year, new stocks, new cryptos have performed well, some not so well. We'll discuss all of that. But we've got an interesting topics, or a few interesting topics that we'll go through, which we'll discuss in a moment. Before we do all of that, I'm joined by the dream team, Brett, Neja. Neja, first of all, how are you doing?
I'm doing well, thanks, Sam. I had a great holiday season, and we have lots of snow now. But yeah, we definitely missed you in December. So I hope you had lots of fun on holiday.
Yeah, it was nice. I managed to get a bit of sun before I had some time off in the UK. I was in Abu Dhabi for work, which was lovely, 25 degrees every day. And luckily, actually, it wasn't that cold in the UK over Christmas until now. And it's trying its hardest as I look outside here in the office in Canary Wharf in London. It's trying to snow, which is not ideal because I'm off to the football later. And obviously, it's not like the football stadium is going to have any heating. So it's going to be a cold one. Brett, will come to you, and the first question is: I want to know how cold, how snowy, what's it like over there?
Yeah, Abu Dhabi at 25 degrees. It sounds cold in the US. But I know that's not the case there. But yeah, in Michigan, quite cold. Quite a bit of snow. We would not be playing any soccer, any football over here at this point.
Yeah, no, no, good, good. Right, okay. Let's have a quick look at what we're going to discuss then. For those that are listening to us for the first time, we usually will sort of have three topics that we go through, unless it's just one big one, and we'll go through something regarding that. But today we're going to talk about precious metals and topics in and around that. Neja, you'll take that. Brett, your focus is going to be primarily on Mag-7 today, and then I wanted to focus on some beaten down stocks and a little bit about the process of maybe finding them. I guess with the hope that they recover. There's no guarantee they do, though, of course. So, Neja, let's talk precious metals with you. Does the rally make sense going into this year? Do you think?
I mean, if we talk about what happened last year everything seems to be going up at the same time. Like stocks were strong. Besides those that you're gonna mention today, and there was excitement everywhere, and everyone was very optimistic also about 2026. And yeah, also gold, silver, they both of them were moving higher, except those volatility days that we saw at the end of the year. So yeah, now looking into 2026, I think that we have to talk about what is the sentiment around precious metals, because I in in my point of view, investors are not panicking, and that would be the reason why precious metal would go up. But in my opinion, they're kind of being realistic, not pessimistic. They just want to diversify their positions across many different assets, and yeah, it seems like it's gonna be. It could be a good year for precious metals this year as well, since we already see some geopolitical tensions, and all of those things can hit up the gains in precious metals.
Yeah, Neja, I'm glad that you mentioned the diversification component because I think last year was a really good example of how diversification can sort of help buffer a portfolio. Even though it was a great year for stocks, it was a good year for the markets, but precious metals really shined. And in fact, gold actually does pretty well, or has done pretty well over the last decade, outperforming the S&P in a number of years. So I think that like diversification component to it is certainly something to consider as we've already seen the geopolitical situation now unfold, probably giving a bit of a boost to metals as we speak. But I guess if I had a question for you, it'd be along the gold miners or precious
Mhm.
metal miners in general. Say we have a year where we're not flooded with rate cuts. Do we need to see precious metals really hold up at their prices or go higher for gold miners to go higher? Or can they move on their own?
Yeah, that's a good one because gold miners are also a way to diversify into precious metals area. If you don't want to expose yourself directly into gold or silver, you can, for example, invest in some mining stocks. But some are saying that they are kind of leveraged to metal prices because nevertheless, they're also operating businesses. So they're exposed to cost, capital, energy prices, labor. It all depends on how many resources they still have or how much gold they are expecting to still dig up, actually, how much they're expecting there to be. Yeah, it is much. There are different risks involved, but if we look back to 2025, we saw some strong double-digit gains in some of the miners. For example, names like Barrick Gold and Newmont, they rose up more than 200%, something like that. I think that Barrick Gold was up around 200 and Newmont or almost 300% year over year. So it is kind of difficult to say what's going to happen this year. But if we want to see miners hold up, it needs to we would need to see sustained strength in metal prices so that we still see gold and silver holding up and rising, not being flat. And also some other thing that could help them grow is some equity volatility, not necessarily a collapse, not collapse at all, but some volatility that normally boosts some mining stocks as well.
Yeah, interesting. I mean, just talking about silver there, it had obviously an amazing year, didn't it? And so did gold, in fairness, best year since the late 70s. But I was looking at the chart of silver, I think it was earlier today, from the 1st of December to the back end of the year, it rose 54% just in that one month. And I think the week before Christmas, it was up 17%. And the next week, it was down. And then the range of this week is like, from bottom to top is 10% or so. It's just been remarkable. And I was actually having lunch today with two friends that I went to school with, but one works literally around the corner and the other one works in Mayfair in London. And I've talked about this person on the podcast before regarding the silver trade, where they made everyone back in the pandemic get long silver. They all got stopped out, and then of course silver is now at the all-time highs. But we were talking about when I think it was, I can't remember the exact time, but the gold silver ratio at one point last year was the lowest it had been, and he in our WhatsApp group put this in the chat. And of course, everyone just ignored him because this is the guy that told us to buy silver in 2020, and we got stopped out. But one of my friends actually did take that advice, that it was a good opportunity to sell his gold position, which had done very well, get straight into silver, and he obviously done incredible, and he timed it well. He took a lot of profit out of that, but he would have got out probably mid-November. So still a great trade. But then if you had held for another month and a half, it'd be even more. And of course, timing the market's tough. But that remarkable end to the year, it really has been. So I'd like to know in the chat on YouTube, or message us, whatever is easiest, or on the eToro page, your thoughts on silver for this year. Do you think we're going to see another strong year? Do we need to see a big rebound to the downside? Be interested to know.
But I bet your friend would be pretty nervous seeing silver going up 10%, down 10% all December long. So,
And those are the things people don't really talk about, right? In any position, when you have, position that is doing well, 10% drops in a day aren't nice. Even if you're up, let's just call it 100%, 150%. It's not easy. It's tough. I think on those days you just don't look at your portfolio. That's my greatest advice, I think, for that. But speaking of rebounds, Brett, what you thinking for Mag-7? Do we get one of those? Or are you seeing something else? Let's talk about 2025 in the mix of that, bringing that all together. What's your view?
Yeah, it as if the Mag-7 doesn't get enough coverage. It's weird to talk about, will it be a rebound year for the Mag-7, because when you look at from an index level, you see the S&P up 17% ish on the year in 2025, the Nasdaq up 20. Tech had the best earnings growth last year, is expected to have the best earnings growth this year. Tech was the best performing sector last year. So then, you're like, does Mag-7 need a rebound year? But only 2 out of the 7 actually beat the S&P, that being Google and Nvidia. And that to me was really surprising. I feel like that narrative sort of flew under the radar for really the whole second half of the year, but really going into the end of the year, that a large portion of this group was not keeping pace with the overall market. And you know, that to me is I don't know, it's just really interesting. We don't see them, a bulk of them being overvalued necessarily. A number of them actually have pretty reasonable valuations. And I don't know, maybe part of that narrative was lost in the idea that Tesla hit all-time highs in December. It's been backed off a little bit since, but Apple had a really strong couple of quarters, specifically after April, and most of those names did well after the tariff lows, obviously. But I don't know, maybe it just kind of got lost in the shuffle. But when we look at Mag 7 for next year, it's again earnings growth is expected to be strong. The valuations here are generally pretty reasonable. I think all but 2 of them trade at less than 30 times earnings, which I know some people will hear 30 times and be like, that's not cheap at all. That's really expensive. But you have someone like an Nvidia, it's growing earnings at close to 50%. Trading 26, 27 times is really not very egregious in my opinion. Of course, not financial advice with it, but I think when we look at this group, it's considered a market leader, not just in a sense of leading its industry or leading this sort of next revolution with AI, but a lot of people think of it as a market leader, and maybe still stick to that idea that what we saw in 2023, which was basically an emerging bull market that had no participation with the exception of these mega cap names. That was the year where we had Nasdaq up more than 50%, Nasdaq or S&P only up like 24. I shouldn't say only 24%, but relative to Nasdaq, it was quite the laggard, and that's because most stocks didn't do very well. It was these mega cap names that did all the lifting. So, I think there's still this narrative that this whole rally is just built on a couple of names, and that's just simply not the case anymore. We're seeing much more participation across the board. We're seeing much more sector participation. And that's where I think 2026 is really kind of interesting because all 11 sectors in the S&P are expected to post positive earnings growth. If we do see that, it'd be the first time in 5 years that happens. So 2021 was the last time, and that's kind of a gimme year. I mean, that was the first year out of COVID, everything was rebounding. So, to me, it's really sets up this interesting conversation with Mag 7 because we have such a big broadening fundamentally in the market, and even to the point we've talked before, recently in the shows about, is it small caps year, is it mid caps year? Do we still sort of see that broadening out across sectors and market caps, or do we sort of see this group come back to life? And I think that'll be a really interesting storyline through the year.
I think that investors are just, as I mentioned also in my response, that investors are, trying to diversify, not thinking just about Magnificent Seven anymore. They're thinking more across different sectors, different industries where is opportunity to invest in. And yeah, you said that valuations are not that high. They are still pretty high if we compare them to other sectors, for example. We see many more undervalued opportunities in some other industries that were kind of overlooked in the past 2 years. So maybe their interest will shift to those areas. And also, small caps, especially if we see favorable interest rates conditions, those could shine in 2026 as well. And this was also one of our bold predictions. And it would be interesting to see if year unfolds so positive for them, and maybe we would see even outperforming small caps over Magnificent Seven. That would be a year.
One of us is finally going to be right on small caps at some point. I just don't know when.
If it doesn't happen this year, this is gonna be my bold prediction for 2027.
Remember, you're never wrong. You're just a little bit early. That's the way to say it. Brett's really interesting listening to the talk of the Mag 7. Obviously, but Google. Who was the? It was Google, and who beat the S&P?
Nvidia.
Right? So Nvidia, fair enough. But Google had a pretty poor start to the year, didn't it? It was really lagging, and it has done incredible. Really has, really incredible. I think I saw a stat, and I should have really written it down, but I think it was Apple is on course for 6 down weeks in a row. I think it's either just broken that or it's currently on 6, which is remarkable when you think of it like that. And I think Tesla has had a poor sort of last few weeks after hitting the all-time high, but yeah,
Yeah,
interesting
the
time.
narrative shift is so intense with these names too. I mean, you look Alphabet's I think the best example. I mean, at that beginning of the year and at certain points along the way, it was going to, its main search business was going to be killed by
Yeah.
ChatGPT, and now it's a leader in AI. So it just can happen so quick, and then when it does, the moves can be tremendous. And the narrative shifts we've seen has happened all over. It's not just Mag-7. I mean, there's plenty of beaten down names from last year that, where the narrative is not good, but the businesses are okay. It's just an interesting storyline coming into the year.
Yeah, it
But the
really
issue
is.
here Sorry, the issue
No,
here
no.
with Magnificent Seven might be that they are so covered by the media that sentiment really has a big impact on them, not even on just on a short period of time, but it can last for a year or so. Because, yeah, you mentioned Google, but we also saw that with Meta a few years ago when it was trading below 100, and everyone was saying that TikTok is the next thing, and Facebook is basically an empty space, and of course it was not true. But yeah, when media says so, it's easy to believe.
Yeah, it really is. I mean, that meta trade, anyone who got hold of that when well, I mean, it was down like 60, 70, 80% at one point, wasn't it? Remarkable. And, I think Netflix at the moment is down around 30 and a bit percent from its all-time high. And I guess actually that can kind of bring us on to my subject that I wanted to talk about. It'd be really interesting as well for you guys to follow up on about sort of beaten down stocks. Because I was just looking on Twitter the other day and came across someone talking about PayPal, and I think it had like a 3% day. But I looked at the chart and noticed obviously it been under pressure for a long time. It was near multi-year support, and then we obviously have our WhatsApp chat, and we had an analyst meeting earlier, and just sort of talking about similar charts, whether people think there is going to be a bit of value there, and similar sort of stocks, and one person, crypto analyst, sort of feels like PayPal is a potentially good opportunity at the moment. We have someone else who doesn't necessarily think so. So they got a bottle of wine on it at the end of the year, which will be fascinating. Again, people listening to this, let me know what you think about PayPal, where it is a good opportunity. But I guess when we look at beaten down stocks, ones that are near 52-week lows, ones that are near multi-year lows, usually there's a reason for that, of course. For it to have a sustained period of losing, fundamentally probably something has changed. But then I guess from an opportunistic point of view, you're like, well, if something's down 50%, if it goes back to its all-time high, you make 100. So the risk reward becomes nice and the opportunity's there, and you might see a bit of value there. So I was looking at a few sort of different stocks, and there's plenty of ways to do this, but I was just someone on in our fascinating to sort of just looking at those. Neja, I'm going to sort of come to you on all of this because you're obviously a value investor. When you're looking for potential, I know you don't necessarily really look at the chart, but I guess for a lot of some stocks you look at, they might have had a period where they've struggled a bit. Is that fair to say? And then how does your process work from that?
Yeah, I mean, chart is not the first thing that I look at, but of course, in when I do the analysis, it's hard to skip the chart. I mean,
Yeah.
I don't do technical analysis, but still, I take a look at it, and of course, you see if the stock is down at its lows, at maybe multi-year lows, and it got you thinking. But it's always the thing that is important for value investors is not to just look for a cheap opportunity, but also something that still has growth potential in it. Because me personally, I made quite a few mistakes that I invested in some things that I thought it's a value play. It's gonna perform well. It's just overseen by the market, but it turned out that this was not the case because there was growth potential missing. I mean, the company still performed pretty well, solid results. But anyway, there was no future excitement about it, and that's why the stock kept at the same levels. So yeah, I think that's one of the major traps value investors can fall in. That's the thing that sometimes when I look at the chart and the stock is really at its lows, I double check if I really believe there is growth potential or not. Because I mentioned Meta earlier and I invested in it when it was below 100. And it was also difficult for me because everyone everyone was saying it is lost business. This is not going anywhere. And it's kind of difficult to convince yourself otherwise when everyone is thinking the opposite. But you also mentioned PayPal. There are many names right now that are beaten down, Novo Nordisk
Yeah.
kind of slowly recovered after this news that came out about the pill, but there is also there is Pfizer, there is Nike that's been low for quite a long time, and yeah, there are many well-known names that are not performing that well.
Yeah, there is, and Brett, I'm going to come to you after I sort of discuss how I would go about finding them, just to see if you've got anything to add, or you would be similar. But obviously, for the people out there listening that maybe want to go down the route of looking for these good risk reward opportunities, again, no guarantee they recover. You've got, screeners that you can use to look at stocks over a certain market cap that are near 52-week lows, or if you want the momentum play, by the way, the opposite of this, where it's about to break an all-time high, something that's near a 52-week high, and then you get the break of that and can run with that as well. So that's obviously a simple way to go about it. But I spend probably too much time on X, previously known as Twitter. But if you follow the right people, it really is great, to be honest, just to get ideas and listen to what people are talking about. Of course, you've got to be careful there as well, because some people might be talking their own book, speaking really positively about a company that actually is just going to continue to move lower. So, just be careful. I think it's more from an idea generation point of view, but also for people that, are listening to this that are an eToro, I find it useful myself to even do this. Look at the popular investors that we have, ones that have got good results, and see what they're looking to invest in. Obviously, leisure people can do that with yourself, but I feel it's quite interesting. If someone's performed really well, what are they adding to their portfolio? If they are a certain type of investor and that's the way you want to go down, obviously you can look for that for inspiration as well. And of course we have our analyst meetings, but Brett, I guess for you, one is looking for, beaten down stocks something you are interested in, or is it the opposite, maybe looking for momentum instead, or is it a mix of everything? And then how would you build that picture up?
Yeah, to be honest with you, I'd say it's kind of a mix. I mean, I'd love to find a high quality company that's also trading at a low valuation where its fundamentals are intact. It's still growing at a impressive pace. I mean, it was kind of on Mag-7 earlier talking about their valuations. You look at something like an Alphabet, and I think Alphabet's a great company. I love Google. But buying it here at 28 times is a lot different than buying it 8 months ago at 18 times, So I think that part of it, and if people want to get technical with the valuations, they can do that too. They could plot a PE ratio instead of a stock price and sort of follow a name that in that manner. But I think Nezha brought this point up. I don't know if it was a month or two ago. It was on the show though, and we were chatting, and she said it's just really stuck with me. She said value without growth isn't value at all, and I think that is an important component to keep in mind when you're looking for names, because and that's where we see something like a Lulu or a Nike or a UNH, or names that have had these really big hurdles, or Target, another good example, have these operational issues in front of them, and these stocks sort of end up in a free fall. And whenever you think it can't go lower, it seems to find a way to go lower. But when you look at other parts of the market, you see something like even a PayPal, a Salesforce, an Adobe. Even it's been very volatile in its first year of S&P trading, but the Trade Desk, these companies have sales and earnings moving in the right directions, cash flows in the right directions. It's just a huge valuation contraction. The sentiment with these names is awful, and that might be something where investors zoom out on the charts, go to a weekly or monthly chart, find those companies that have contracting valuations, and then maybe find somewhere on the chart where it makes sense, a valuation level, a support zone from years past even. could be relevant with these names. So it's a blend, and it's kind of an art over a science at sometimes. But yeah, it's interesting.
Yeah, definitely. I mean, listen, people can go and type in, maybe do it as homework, the top 20 companies in the world by market cap, and just look how many periods they've had 30-40% drops in their time, and how often a multi-year low acts as an area of support before the rebound. It does happen. But at the same time, there's going to be plenty of companies that do, as you said earlier, Brett, do continue to go lower. Even when you think they can't, they do continue to do that, which is an easiest thing in the world to manage. But also remember, everyone listening to this, you aren't going to win every trade. You aren't going to win every investment you ever take. So diversification, good risk management are things I would look to really practice. And on that, guys, we'll wrap it there for another week, the first one of the year. Looking forward to the next. Hopefully, the weather will start improving for everyone as well, and a little bit warmer next week. But Brett, Neja, as always, thank you very much.
Thank you.
Thanks, Sam. See you guys.